I'm bringing Culpom Capital Management President Gary Culpom, Tematica Research CIO Chris Versace, and our very own Nicole Pedalias on the floor of the New York Stock Exchange. Again, we're continuing to watch this market. So far, not a huge reaction. But I'll tell you, Chris, this kind of sounds good. They're talking about brisk demand for workers. They're talking about wage growth, a moderate uptick in job growth. I mean, I kind of like the sound of all this. What about you?
I totally agree with you, Trish. I mean, if we look at, the data that we've been getting up till now, it's been mixed. We've seen the Citibank Economic Surprise Index start to roll over, but this is a positive report. I would like for the data to be a little more robust, not the use of so much of the word moderate, but it seems everything is moving in the right direction in aggregate. There's some pockets of weakness, some pockets of question, pockets of inflation, but again, the overall message is positive.
Okay, so again, just to reiterate for folks, they have downgraded their sort of expectation here for the economy, calling it expanding at a modest to moderate pace after having called it solid back in January. Nonetheless, I'm reading the headlines from the press release here, and they're saying manufacturing production strong. Manufacturing production strong. That many districts are experiencing worker shortages, and that there is brisk demand for qualified workers. It seems to me these are the kinds of things, Nicole Pedalias, that you start to hear when we begin looking at an economic recovery, a real one.
Right, and we've had a relatively slow one, but things have been picking up since the Trump administration took over with a more business-friendly environment, and things are looking better. That's why everybody's expecting 3 to 4 interest rate hikes this year. Interestingly enough, as I started to hear modest to moderate for the economy rather than strong, I started to wonder, will it be 3 hikes rather than 4 hikes? But the market didn't really react or tell us much of what they think. They were looking at it the big picture, which is that we have an improving economy. The Dow, right before it was released, was down 241. Now it's down 233. So very limited movement as far as the VIX, the fear index. That too did not really move. Neither did gold. So those would be some of the things that would move and have gyrations if they were concerned about more or less interest rates. So they pretty much took this one in stride.
Yeah, I'll tell you another headline I like. Inflation picking up across the country, though moderate, Gary. That's exactly what we want, right? You need some inflation. You don't want deflation or stagnation, but a little inflation is good if it's moderate.
Keep in mind the beige book is a lot of opinions, but the economy's fine. The inflation is not getting out of hand. Interest rates did not go through 3%. That's good news for now. What I'm more worried about is all the other things that are starting to come out of Washington, D.C. I think already forgotten was what the lovely twosome of Ryan McConnell did a few weeks ago when they raised government spending $300 billion a year, guaranteeing $1 trillion deficits going forward as far as the eyes can see. That is a major headwind, and now we get a little
I know you keep going on the deficit, but you know what? If you're going to have tax cuts, it's going to contribute to the deficit. That's just the reality of the situation we're now facing. I would like to see a whole lot more cuts in spending. I think they can do that, and they need to be more aggressive about that. But look, when you offer up tax reform, it does actually cost us something. But I think it's a cost worth taking on, Chris, because I think that the benefit of that, the GDP growth that you should get out of that, means higher tax revenues in the near term. Your thoughts?
Yeah, I would say, probably not so much the immediate term, but down the line, it's going to take time for some of this extra cash to kind of flow through the system for companies to invest, put people back to work, train people so they can actually fulfill those jobs that are out there. So I am hopeful and positive on this. I think in the short term, though, we tend to see a little bit of a lag that could weigh on things. But I think, again, if it's later this year into 2019, I think you're right, Trish.
Lots of fundamentals that are good right now. Let me ask about Gary Cohn here, who, by the way, was one of my first bosses back at Goldman Sachs, and he ran the fixed income group back then. I was a little surprised when he signed on to the Trump administration because I don't know, is he necessarily ever identified with a lot of the economic policies, Nicole, that Donald Trump embraced. And I've said over and over again, it really should come as no surprise that he's moving forward with tariffs when this is something he talked about over and over and over and over again on the campaign trail and has continued to say, we need a level playing field when it comes to trade. And yet you get the markets all worked up over this one. Is this once again just overreaction on their part?
Well, they could have really had a lot of overreaction. I mean, Gary Cohn is a market man and really made a strategic move in resigning after the closing bell. I don't know if it was he and Trump together who decided that, but that was definitely a gift because some traders said you could have been down 500, 800 points. I mean, you knew that that would be, even though everybody expected him to step down at some point, particularly after tax reform was done, but the markets are down just 246. So they're gonna move forward with this one.
I get to Gary. Am I missing something? I mean, I really don't think it's that big a deal. I really don't. That we're going to try and protect an industry that we want to protect for national security purposes. And simultaneously, while we're doing this, we have the ability to kind of stick it to China, given that China has not followed through with sanctions on North Korea. And we got video of the Chinese trading with the North Koreans. I mean, maybe this is one way for the Chinese to get the message. We're serious about this. And we have a lot of economic pain where that came from that we can inflict should we need to do so. Your thoughts?
Well, look, I am one that is happy that the White House is addressing trade. We've been screwed for so many years by so many countries. The question is how you do it and whether it's going to be effective. What you have to realize is every country is going to act in their own self-interest. And I think when you try to put the hammer down so hard, they may come back just the same. And you see some talk of retaliation already. I don't think it's the biggest of deals going forward unless we do get in that proverbial trade war, which would be real bad.
I got
That's
news
where
for you.
uncertainty shows up.
We'd win because you know what? We are the world's biggest economy. And we might take a little bit of pain here and there, but the others would take a whole lot more. I mean, if Europe wants to tax Harley Davidson motorcycles, I think we can find some ways
and bourbon.
to...
Well, the companies are clamoring, the automakers.
Maybe they should. The Europeans
industrials.
need to drink less.
Right, exactly. The companies may be complaining, but the big picture is that ultimately they're negotiating and making better trade deals for the United States of America.
Yeah, well, that's what matters. I mean, we gotta protect ourselves in this in the long run. Thank you so much, guys. Good to see you, Gary, Chris, Nicole. Turning now to our other big story here. We'll actually